Okay, I think we'll kick off. Welcome everyone. Thank you very much for joining the Ignition Financial and Ignition Law I Am a Founder webinar. I'm joined by David Farquharson, who's the co-founder of Ignition Law. Today we're going to be talking about cash flow, short-term cash flow, because I know this is on most, if not all, of your minds at the moment. And secondly, David will be talking about employment law matters, the Corona Job Retention Scheme, and also the self-employment schemes which the government has announced as well. Just a couple of quick things. We're going to have a pop-up, quick pop-up survey just to make sure that this webinar and future webinars can cover topics which are important to you and you want to know about. So it should be on your screen now. If you wouldn't mind just sending us some brief feedback, we can make sure these pop-ups are giving you the information that you want. Additionally, if you've got any questions, we'll take them at the end. There's a box in your Zoom window where you can click for Q&A, and you should be able to just type your questions and we will come to them at the end. I think before we get going, the final thing to mention is that all of the information that we're talking about today is on our website, which are COVID pages. So www.ignition.financial/COVID. And if you're not already, you can stay up to date for our newsletter, which the I'm a Founder newsletter, where we're sending out all the latest information, both from the government announcements and from what we're finding out via clients and also advisors in the market, particularly in relation to the coronavirus business interruption loan scheme, but also the other schemes as well. Okay. So first of all, how to manage your cash flow during the COVID-19 crisis. Now, Stu, if we could go on to the next slide, thank you. So I'm going to talk about three levers here. First of all, operational cash flow levers, then the debt, and then equity options. And it's important to use a combination or look at all of the available options and try to manage your way through this as best as possible. It's particularly important if you're thinking about applying for things like the coronavirus business interruption loan scheme. One of the conditions, or one of the criteria, I should say, is that they are looking to see what you have done in regards to all of the available reliefs and grants and schemes that are available at the moment first, before applying for those business interruption loans. So I think the most important one to kick off with is the HMRC deferrals. So the VAT deferral for this VAT quarter is a really big one for most businesses. That's automatic, so you don't need to do anything. That will be deferred until next April next year, sorry. PAYE and national insurance contributions deferral. If you haven't already, I would seriously consider calling up HMRC, and you must call up HMRC. You can't just stop your payments to them. If you give them a call to the coronavirus helpline, they're generally amenable at the moment, and depending on what sector you're in, they'll defer your PAYE and national insurance contribution payments for between 1 and 3 months. It's important to note that there is an interest charge on this, but it is pretty low. They've just taken it down from 3.25% per annum to 2.75% per annum. So it's quite low, and I would encourage all businesses to look at doing this if they're concerned about their cash flow over the next 6 months. The next one is the Coronavirus Job Retention Scheme, which David will cover in detail. Beyond that, I would be thinking about Innovate UK grants. So a lot of our clients are innovative science, technology based businesses, and there are grants all the time which are open to this. One thing to bear in mind, though, is that these are claimed quarterly in arrears, so it won't alleviate any short-term immediate cash flow difficulties. But I would encourage you to keep checking the Innovate UK competition's website to see if there are any which are open, particularly if you are in the healthcare space, for example. Fourthly, R&D tax credits. We're getting a lot of inquiries from clients because this is a great source of funding. Technology and innovative businesses, even if you think you might not qualify, it's worth just checking out whether you do, because you can claim up to a third of your qualifying R&D spend. And for loss-making businesses or growth companies, that comes in the form of a cash rebate. For profitable companies, it can reduce your corporation tax bill. There's a little stat here that the average UK SME claim is 45,000. I think with our clients, it's considerably more than that because they are R&D intensive and heavy. Other things within operational cash flow you want to think about is your customers, how quickly they are paying. Are there any levers at all that you could use to incentivize them to pay a little bit quicker? There are also things such as invoicing discounting, which you can access, and you can access that via our partnership with Ignition Financial and Swoop's partnership. And suppliers, do be careful with suppliers. Make sure it is a conversation that you're having with them. People will have long-term memories from this, so try not to stretch your suppliers too much without involving them and making sure that a relationship is maintained there. Okay, debt and loan levers. So I'm sure you're all aware of the first one, director and shareholders loans. This is the quickest and easiest way to get money into a business. It's not going to be possible in every scenario, I know that. But for some of our technology clients and innovative businesses, what we are seeing is that the shareholders are prepared to give short-term working capital loans to help them during this period. The coronavirus business interruption loans, a lot of press on this, not off to the greatest starts. We did some inquiries ourselves with our bank, Santander, and they asked us to apply for an overdraft, which was up to £25,000, and I think 10 to 15% interest. So, but the news out today is that banks are going to have another go, and we will be updating you with more information as that comes in. I'll cover that. I'll cover a little bit more in a moment as well. But with the coronavirus business interruption loans, the big announcements today is that there are no personal guarantees if the amount you're borrowing is under £250,000. I would like to stress, though, one of the key criteria that they are looking at is for viability of businesses before this outbreak. And the key thing that they're looking for there is the EBITDA for the 12 months ending 31st of December 2019. So for some high growth businesses, I know that you'll be loss making, and at present, unfortunately, this loan scheme doesn't look like it's open to you. There are a lot of lobbying and pressure being put on the Chancellor and the Treasury to come up with something for technology clients. But for the moment, I would encourage tech businesses and high growth businesses to look at the government startup loan scheme. This is an existing scheme. It's been running for many years. You can borrow up to £100,000 per business, and that's as long as you've got 4 directors. So it's £25,000 per director. There are no personal guarantees. It's repayable in over 4 years. That's capital and interest, although you can get repayment holidays. And the interest rate is 6%, which is still quite good in my view. There are a number of other SME financing options, which you can take a look at on our partnership site with Swoop, things like trade finance, invoice finance, additional term loans that may be applicable. I'd encourage you to take a look if that's something which you think might be applicable. Okay. Fine, on to equity. There are some really mixed messages, I think, is the summary at the moment from investors. I've spoken with partners in venture capitalists who have said that they are prioritizing their existing investments and supporting their existing portfolio, and they're not looking to do deals with new companies at the moment. So, if you have been equity financed in the past and you haven't done already, I would encourage you to go to your existing shareholders and see what they can do for the short term. It may just be a bridging loan or a working capital loan, but it's definitely worth asking them what they can do, because the coronavirus business interruption loan scheme does not look at the moment like it will be an option for you, and the government startup loan scheme may not be something you want to consider, or may not be appropriate either. If you are mid-round at the moment, then 3 words: advanced subscription agreements. Get some cash in now. This is a simple letter which you can get in place with investors to get their pledges into the bank, and it basically acknowledges that they've put in money and that you will agree and discuss terms, including valuation, later, and that shares will be issued no later than 6 months' time, or if an investment round closes sooner, whatever whichever comes sooner. Often in ASAs, you see things such as 10% discounts given for 10% discount on the final share price of the closing round given to investors who pledge and put in this cash early. I cannot stress enough, if you are mid-round, do try and get as much as you can in via advanced subscription agreements. Finally, there's been some research from PwC's RAISE team, and the chart that you will see on the screen contradicts the conversations that I've been having with partners, but this is why I'm saying that there are somewhat mixed messages out there at the moment. People are still trying to find their feet in the investment community, thinking where they stand, and trying to, well, it's the uncertainty, isn't it? I don't think they mind risk, it's the uncertainty which they're trying to get to grips with. But in the survey, all of the 84 venture capitalists surveyed were pretty unanimous in saying that there are going to be opportunities for health and edtech companies as a result of the COVID-19 outbreak. But they all do expect that deal values and volumes will decrease, and perhaps unsurprisingly, well, they would say this, wouldn't they? They are predicting a decrease in the valuations for investment as well. But as and when we hear more from venture capitalists, we will update you via the I'm a Founder newsletter and keep you posted on those things. On to the next slide, please. Thank you. Over to David.
Thanks very much, Adam. Yeah, so after that being all about the finance side and the cash flow, this lot is about the coronavirus job retention scheme. And it uses that almighty expression that hardly any of us have really ever heard before, furloughing. And we're kind of all hoping that as of next year, that's more of a sort of Trivial Pursuit question or a quiz question or something like that, rather than anything we ever need to deal with again. But there's some sort of basic requirements for it. But a lot of it it's a bit suck it and see, because there's a lot of elements that questions that come out of the sort of, I guess, very binary rule book on furloughing, that, you know, it's sort of a practical application. And so what would be good is if after this, any sort of queries you have, just write them down on the chat on here, and I'll see what I can do to answer them. If not now, then certainly just after that. So what have you got to be? Well, right. Well, first of all, you can't make people do it. You can't just say to your employees, right, you're all being furloughed. It's really more of a, well, the alternative is redundancy. And so, or the alternative is that our company might not survive. So unfortunately, it'd be great if you would all be furloughed. And what does that mean? Well, it means that the government, up to £2,500 a month gross, so that's 30 grand a year, up to 30 grand a year, the government will pay 80% of your salary. So if you're on 37,500 a year, the government will pay 30,000 a year. If you're on 60,000, the government will still pay 30,000 a year. If you're on less than 30,000, the government will pay 80% of whatever your full salary is. So hopefully that all makes sense. You do not need to top up the 80%. So for example, if your employee is on 37.5, the government will still pay 30,000, even if you decide in consultation with your employee that you can't pay that extra 20%. But to do that, again, you'd have to get your employee's consent for a wage deduction. Now, all employees have to have been on the payroll by 28th of February this year. That doesn't necessarily mean that they have to be on the payroll right now, because if you made someone redundant after the 1st of March, then you could actually bring them back onto the payroll now, furlough them, and at least therefore they would have, for example, 80% of their salary, even if you can't top that up. So that's something perhaps you could do for employees that you may have had to make redundant already. Yes, here's this point. You should do no work during the period that you're furloughed. Now, this is a bit of a nerdy one, but I've looked into this in some detail. And basically what this doesn't mean is that, as some HR departments have proclaimed, is that you can't talk to other employees. It doesn't mean you can't have your Zoom sessions on a Friday afternoon where you check out what everybody's watching on Netflix, and you have a virtual pub, etc., etc. So it doesn't mean you can't stay in touch. It also doesn't mean that you can't do training. You can do training. You can do training exercises that your employer can sort of pay for. That's absolutely fine as well. And if you're a director, you can do what you like in respect of statutory filings, etc. So if you need to sign off accounts, if you need to talk about new share allocations, put those things in at Companies House, that is all fine too. Company directors, often paid in dividends. You can't claim the dividend aspect of your remuneration under furloughing, but you can furlough yourself, and you can claim the PAYE, i.e. any salary you've been claiming as a director. So bottom bit here, when's it coming? Well, it's already in place. It's in place for anyone who was made redundant, on the 1st of March, from the 1st of March onwards. And it's in place for anyone that's been on your payroll at 28th of February. But we're not getting the money in from the government yet. We are told that the first grants will be paid by the end of April. So it may be that in cash flow terms, you have to pay your employees now, and then cash flow it until the end of April, when you will be repaid by the government. So hopefully that kind of all makes sense. Stu, can you move up? There we go. Brilliant. Next slide. Support for the self-employed. So these guys, your regular sort of contractors, got left out initially, which seemed a little bit unfair. But eventually the government came through, and the position is not dissimilar. It's a bit more technical, but not dissimilar. In short, the HMRC, the government, will pay up to 80% of your average profits over the last 3 years, as long as that equates to not more than £2,500 a month. A few more requirements as well. You cannot have been earning on average more than £50,000 a year in profits as a self-employed person. If you do, then it's not that you can participate in respect of your profits under 50,000. You just can't, unfortunately, participate at all. They think you're all a bit too rich, unfortunately. So sorry about that, anyone who's been earning over 50,000 in self-employed income. You don't have to be uniquely self-employed. You can maybe have been an employee of another business on a part-time basis, but the rule is that more than half your income has to have come from self-employment. You also need to have been self-employed since prior to 6th of April 2019. So basically what that means is you need to have filed a tax return for 2018-19. If you were self-employed before that date, you've still got time to file that tax return. 26th of April this year is the date by which you have to file that return. Again, important practical point. Yes, it can be backdated to the 1st of March, just like the employee situation, but we're not expected for that money to come through until June time. So it's a little bit longer to hang on the cash flow basis for the self-employed. However, difference with self-employed people, you can continue working. Employees can't. Employees can do their little Zoom hangouts on a Friday afternoon and share drinks over video conference. But you can do a bit more. You can actually carry on working and still claim under this scheme if you are self-employed. So there's some good news for any self-employed people out there. And I think that is really, that's just really a summary of what the employee and the self-employed situation is. I see there's a few queries already in there. Some will be for Adam, some will be for me. So first one really, what's the practical application for company directors to make a PAYE claim? Certainly in the case of, ideally, I think, Adam, isn't it? That's possibly one for you, really, isn't it? Go on the HMRC site when that.
That's right. Yeah, David. So when the HMRC are building a portal for furloughing, and when that's up and ready, which will be sometime this month, they haven't given us an exact date, then you apply through that. The payment will be made by BACS direct to the company's bank account by the end of April as well, and that will cover March as well if appropriate.
Going into the Q&A bit here.
Yeah, sorry, just before we move on, David, there was a good point of information raised by Lisa Gillett from Virgin Startups. The startup loan is repayable over 5 years. I think I said 4 years, and you can pay it back sooner if you like. There's no prepayment penalties or anything like that. Yeah, so sorry, David, back to you.
Is there anything on the horizon for tech companies, sort of pre-revenue companies? To my mind, it honestly depends how long this thing goes on for. We don't really know. You know, if business is not up and running again by, let's say, mid to end of May, I think I would suggest, my instinct is that the government will start pushing forwards that date by which you need to have been employed, because. So instead of being 1st of March, they might say, right, well, you need to have been employed by the 1st of April. The reason they haven't done that so far is obviously it's a cutout fraud, really, because they don't want lots of people creating sort of almost false employment and then taking all their salary from the government. But I don't know if there's anything precisely for tech companies, but I do think if this goes on for a long time, we might have that. Might have and I suppose, Adam, the grants, really, I suppose, is something to go.
There's a bit of lobbying going on at the moment. Some of you may have seen our friends at Founders Factory. Brent Hoberman wrote in the FT an opinion piece because a big fund had been set up in France to support their high growth businesses, in particular tech companies, and the UK has always led Europe and, well, pretty much the rest of the world outside the US, I would say, in being one of the leaders for technology companies. So I'm hopeful that something will come, but for now, we would encourage you to pursue 2 avenues of funding, or 3 really. One is looking at your existing investors, see how they can support. The other one is the government startup loan scheme, and then the third one would be R&D tax credits.
Zaina, the answer to your question on maternity leave is the government's just going to mimic what your employer pays you. So they won't, if your employer's been paying you sort of statutory maternity, then they're not going to do anything for that for February, March. If you come back from maternity on the 1st of April, you'll just get paid, 80% of your normal salary like everybody else. But in respect of the prior period when you were on mat leave, you're just going to get what, if your employer hadn't furloughed you during March, then you're just going to end up with what your employer actually paid you during that period.
Okay. David, we've had a couple of questions come in the comments section. I think, David, is it possible to furlough an employee who's joined since the 1st of March?
Sadly not. Now, we had a query about this the other day, and again, I'm not saying I totally know the answer to this because I don't, but where there was a binding agreement in place, and and the person had started employment but hadn't been registered for PAYE, we think the likelihood, so they'd started employment, let's say 25th of February, weren't registered for PAYE until after the 1st of March. We think the government is going to meet that, and you'll be able to be furloughed. If you've started since the 1st of March and you're not in that situation, then unfortunately at the moment you're not able to be furloughed. But again, the longer this situation goes on, the chances are that they will push that date forward, I would think. Furloughed team members going on mat leave from, say, the 1st of May. It's interesting, isn't it? It depends, Tessa, it depends what your employer, what your mat leave policy is. So if your mat leave is stat mat leave, you will just be paid statutory mat leave if that's already pre-agreed. If your mat leave policy is sort of contractual and it's a bit more, then there will be an element of furlough in that if that's what's agreed. Hopefully that makes sense.
I've got a question in the chat section which is saying government startup loan, where does one apply for that? Guy, you can apply direct, but we recommend going to, there's a couple of providers which we think are really good. One is Virgin Startups, and I mentioned Lisa Giller earlier, and the other one is Dave Lehman at Onset Growth. Both really good, and they'll hold your hand and help you through it. They don't charge a fee to startups. They're paid by the government to administer this scheme. So I'd recommend getting in touch with either or both of them. There's details on our website as well, our COVID page, where you can find out more details about the scheme and decide whether it's for you. And if you want a personal introduction, I'm very happy to do that. I've had another question about how viable is crowdfunding at this moment. That's a really interesting question. There's not been a lot in the press or in the ecosystem about what's happened to crowdfunding. So what I'm going to give you is my opinion. So we work quite closely with seeders in particular, and it's always been the case with seeders that if you want to go and launch on their platform, you need to have, I think it's 50 to 70% ideally of your round pledged. And I guess if that's harder to get those pledges in at the moment to do a seed round, then it is going to be harder to crowdfund as well. But as far as I'm aware, that they're not closed or anything like that. But if you are able to get 50 to 70% pledges, then you're probably likely to see less people on the platforms. Everyone, I would have thought, at home will be thinking about what they do with their discretionary spend. So yes, it may be tougher.
One more question there, Clifton. If the current period of, I guess, what we call lockdown is extended after May 2020, are they looking to extend the furloughed scheme? That is absolutely my understanding, yeah. Clifton. Certainly the case, yes.
Okay.
Any more questions? Obviously, if there aren't, anyone that sort of wants to send one or both of us an email afterwards, I'm delighted to sort of help you out with that.
Okay. Well, thank you very much for joining. Thank you to Mano, Stu, and Joe in particular for getting this all set up, and David for presenting. We will be doing these every Friday, and we'll change the topic to what you want to hear about, what you want to, what's on your mind. The slot will be Friday, 2 o'clock, I believe, but we'll send out details as far in advance as we can. In the meantime, do keep checking our COVID pages, which we're updating constantly for all the latest news and what we're finding out from our clients and also in the market with respect to all these different funding types and these new schemes which are being introduced. Thank you very much. Stay safe, everyone.
Brilliant. Have a great weekend, everyone.